Hello, and thanks so much for the intro. My name is Steve Dalia. I'm going to walk you through a course titled Incorporation 101. We're going to cover some of the benefits of incorporating, some of the do's and don'ts, the differences in some of the states, and why it's something you may want to seriously consider. So without any further ado, I'm going to jump right into my presentation. So here we go. Why real estate agents should consider incorporating. I say PA because in Florida, Florida Realtor incorporates as a PA. We'll talk about that as we go through the presentation. Or forming an LLC. In most states, the predominant entity for a real estate professional is an LLC. In Florida, it happens to be a PA, which is a professional corporation. I'll get into that. You see my name at the bottom. I'm licensed in Florida. I have a PA. Okay, here we go. This is what we're going to cover today. What does forming a legal entity mean? What does it mean for you as a real estate agent, and specifically as a real estate agent in your state? How the process works, some of the third-party entities that you're going to have to interface with, like your state's Secretary of State, your state's Real Estate Commission, everybody's favorite, the IRS. You're going to need to update your broker with a new W-9, and you should have a business bank checking account. We're also going to talk real briefly about how to coach your investor clients, something that they might want to be interested in as well. And then the 5 critical next steps after you incorporate. And of course, I always provide an incentive for people that come to my class. If you decide to have my company handle your incorporation, I do provide an incentive. But the most important thing I can say is that every state has its own rules. Every real estate commission has its own guidelines, and you must check with your real estate commission. Prices are different. Annual filings are different. Some states are easy to do. Some states are more difficult to do. We're going to give you a taste of some of those states today, but the main thing is this is not a one-size-fits-all scenario. This is extremely state-specific. Whether you're new as a real estate agent, you've been doing it a long time, whether you're full-time or part-time, it really doesn't matter because you are running your own business and you are the boss of that business. And as the boss, you get to make certain decisions. Decisions like how are you going to protect your personal assets and how are you going to hold on to as much of the money as you earn via some tax savings and tax strategies. So we'll get into some of this as we go through the presentation. So what does incorporating or forming an LLC mean? Well, it's designed to be a separate legal entity that has its own privileges and liabilities, distinct or separate from its owners. It can do certain things. It has the legal capacity to enter into agreements or contracts. It can incur or pay debts. It can sue, and it can be sued. Now, nobody wants to hear about that, but you'd rather have your corporate entity be sued than you personally. And most importantly, that bottom bullet, it's going to be held responsible for its actions separate from the owner. So that whole business of separation is a very important distinction. I would say it is as important, if not more important, than the tax savings that you're going to enjoy. So if you came today to today's Lunch and Learn and you're not already incorporated in your state, there's probably a 100% chance you're operating as a sole proprietor. A sole proprietor is an individual owning a business. It's your real estate business. You own it alone because every state you have to be individually licensed, so that would make it you own this business alone, and not as a separate legal entity. As such, you have no legal protection because your personal and business assets are combined under one umbrella. So what are your options? Your options are you can be a corporation or you can be an LLC. In Florida, where I'm most familiar with, I've lived there for 30 years. I've trained tens of thousands of agents on this topic, and I've done about 3,000 corporate filings in the state of Florida. In Florida, when realtors incorporate, they get put into a professional group. So their corporation is classified as a professional corporation, and it gets the designation of PA, but it's a corporation. So you can be a corporation or you can be an LLC. In Florida, the primary entity type is a PA, but in most other states, it's an LLC, and we'll talk about that as we go forward. So when a corporation is first formed, it starts its life as a C corporation. It gets that asset protection, it gets the separation from personal and business assets, but it does pay corporate taxes and it does get hit with something called double taxation. So my company is Dalia Sales and Marketing Incorporated. So it's a corporation. It happens to be a subchapter S corporation, which I'll talk about in a second. But if it were a C corporation, here's the tax implications of that. Let's say I do $100,000 in gross revenue. I have $50,000 in legitimate deductions. Then I have a net profit of $50,000. Well, the first thing I have to do on that net profit of $50,000 is I have to pay my corporate income tax at the federal level, which is 21%. So that's $11,000 comes off the top, leaves me with $39,000. Then I need to take that $39,000 to live and have to pay tax on that again when I take that money. So that's what I mean when I say it has double taxation. So no problem. We can work around this with some things in the tax code. We can tell the IRS we want to be taxed as a subchapter S corporation. Now, critical point here, because a lot of people get confused about this. An S corporation is not a physical corporation. It is merely how you tell the IRS you want to be taxed. So let's go back to that. It enjoys something called flow-through tax treatment. Here's how that works. Let me go back to my Dalia sales example. Same scenario. Top line revenue, $100,000, $50,000 in deductions, $50,000 net revenue, net income. Now this time, because I'm an S Corp, my corporation doesn't pay that 21% corporate income tax. My entire $50,000 flows through to me personally, and I pay tax on it once. And then I'm going to show you on a tax screen how we save even more on that. So again, you can be a corporation or you can be an LLC. An LLC is a little bit of a different structure. It's sort of a hybrid between the sole proprietorship we talked about and a partnership and a corporation. So it's kind of a hybrid. But the bottom line is it delivers the same benefits. You can enjoy limited liability because you're separating your personal and your business assets. And an LLC can also tell the IRS it wants to be taxed as an S corporation. So it really comes down to they are really much more similar than they are different. Now, in most states, LLC is the predominant entity type, but in Florida, it's a PA. I do this mostly in Florida, and the question I get is, which is better, a corporation or an LLC? So I put up this slide to show that they're more similar than they are different. The only difference is that a corporation or a PA has to have an annual shareholder meeting and keep minutes of what occurred at that meeting. Now in Florida, the licensing board, DBPR, Division of Business and Professional Regulation, says you can have a corporate entity, but you have to be the 100% owner of it. So that sort of means it's silly. You're supposed to have an annual meeting with yourself and keep minutes of what occurred at that meeting. No worries, because most agents do this anyway when they sit down and they write their business plan, which I know AnyMac Works trains on business planning quite a bit. So really the bottom line is it doesn't matter which you pick, and I'll show you at the end the predominant entities in a lot of the states. But in Florida, it's a PA. In almost all other states, the predominant entity is an LLC. Either way, don't get wrapped up around this. They're both much better than continuing to operate as a sole proprietor. What are the main reasons why people incorporate? Asset protection we talked about, tax savings we're going to drill down on. But did you know now, even as a new corporate entity, we've got agents in Florida that are forming new entities and then immediately going out and establishing a line of credit for those new entities. At the end, we're going to put up a form. If you're interested in any of this, you can let us know. But now business entities, even new ones, can get a line of credit. You can also build your retirement savings by establishing a solo 401k. Having a corporate entity does increase your credibility, and according to an article in the Wall Street Journal, it does reduce your risk of an IRS audit. So let's talk about a couple of these. We're not going to go into detail on every single one, but asset protection is important because we know we live in a litigious society where we can get sued for legitimate and even non-legitimate reasons, whether we're guilty or not. If you have a corporate entity, it helps to protect your personal assets. Both corporations, PAs, and LLCs allow owners to separate and protect personal assets because you'll be operating under a corporate veil, which is the virtual wall between the assets of your corporate entity and your personal assets. So there is a company in Kentucky. They're an E&O company called Rice Insurance Services. You can Google this, and it actually goes into detail on each of these. But the bottom line is, unfortunately for us, real estate professionals do get sued. So if you ever get sued, it's better for you to have a corporate entity than not. Question I get, I have E&O insurance. Do I need a corporate entity? Don't know. My belief is I want all the protection I can get. An analogy I use is, I'm old enough to remember before airbags came out, we had seatbelts. Airbags came out, we didn't ditch the seatbelts. Now we use seatbelts and airbags, right? So I'm all for taking all the protection that I can get. So we talked a lot about the legal aspect of this, but the bottom line is we sincerely hope you go through your whole real estate career and you never get sued. But there's one thing that we know that you're going to have to do every year you're in business, and you're going to have to file a tax return. And what is the number one goal when you do your taxes every year? You don't have to answer this. I just say that rhetorically. And I get a lot of different answers on that when I do this class live in an office. But the bottom line is, I have a friend that worked for the IRS in the enforcement division, and he says the answer to that is simple. Just pay what you're legally obligated to pay. And I can tell you that we as real estate professionals are dramatically overpaying our taxes. And I'm going to show you by how much on this screen here. So I'm going to go through an example. I'm going to show you what a person's tax bill might be as a sole proprietor and what it possibly could be if they were incorporated. Now, I do want to disclaim all of this, that I'm not a CPA, I'm not an attorney. You're going to speak to your particular tax advisor about your situation. This is just for demonstration purposes, but I'll back it up by a third-party person that kind of says the same thing here. So first we're going to look at if you're not incorporated. Let's start at the top in that middle column, sole proprietor. Let's say this agent does $90,000. Now this is net income. This is after they paid splits, they wrote off their deductions, etc. This is the amount of money that they're actually telling the IRS they earned for the year after all of their deductions. So their net income, if you will. The first thing that anybody needs to do is to pay self-employment tax. That's Social Security and Medicare. 2.9% for Medicare, 12.4% for Social Security, or a total of 15.3%. That comes out to, in this example, $13,770. Let me stop for a second. I said in the beginning, it doesn't matter if you're brand new, been doing it for a while, part-time, full-time. The numbers I'm showing you here are proportional. So if you're just getting started or you're just looking to make a few extra dollars on the side and your income is $30,000 or $45,000, this number is proportional. It's proportional all the way up to about $167,000 in 2023. I'm sorry, 2024. I don't even know what year we're in here. because if you earn over 168,000, the part of this number goes away, so the numbers would skew. But for almost everybody, these numbers are proportional. So you're going to pay $13,770 in that self-employment tax. You might look at this and think it's high. You might say, hey, I either have a job or just came out of a job. They were only taking about half of that out. That's right, because the whole time, unbeknownst to you, your employer was paying the other half. So you pay 7.65, they pay 7.65 for a total of 15.3. Now you're an independent contractor, you're a sole proprietor, so you're responsible for both sides. I call it a transaction, both sides of that transaction. So then you still have to pay your state income tax. I do this mostly in Florida, so Florida doesn't have a state income tax. But whatever yours is, it is. It's always going to stay the same. And then the federal tax, this particular person, I said, let's say it's a she, she's married, and at that dollar amount, that puts her in the federal income tax bracket of 22%. That's another $10,842, or a total of $24,612. Great. Let's now look at what her tax savings could be if she were incorporated as a corporation or a PA or an LLC. Again, it doesn't matter. They all have the same effect. Same 90,000. This time you'll notice I'm showing it in two different buckets, the salary or commission side of it and the distribution side. The distribution side is profits. Why do people own companies? To earn profits. Here's the good news about profits and being able to separate your income into these two buckets. Whatever amount you take on the distribution side is not subject to the 15.3% self-employment tax. So you'll see what happens when I show the self-employment numbers. The number goes down dramatically from 13,770 to 5,508 because this amount here is not paying the 15.3%. You still pay it on this amount, so you're still funding your Social Security. With this thing, we can still do a solo 401k, so we're not worried about our retirements being less money. There's talk, we don't even know if Social Security is going to be around for how many years. Bottom line is, you're saving a ton of money here by separating your income into two buckets. Your state and federal tax savings are the same, but the bottom line is now your total taxes have gone down dramatically from 24,600 to 16,300, or a total of $8,200. So let me show you a shortcut. If you're thinking about this 2 months from now, 6 months from now, this number it's actually 9%, but think of it like maybe 10%. So sometimes I talk to agents, accountants, and they say, oh, this doesn't make sense unless you're making 85,000. Well, guess what? Even if you're only doing 30,000 a year, you're going to save about 3,000 in taxes, and it's going to cost you a couple $100 to do it. So I think anybody here, if you're going to spend a few $100s and save a few thousand, you'd probably do it. So just think that the savings are roughly 10% of your adjusted gross income. Let me put this number in perspective for you. If this agent netted 90 and she paid 24,600, that means she brought home after taxes, after everything, $66,000. Whoops, I didn't mean to do that. Oh, I didn't build it in on this screen. Okay, sorry. That gives her a monthly net income of $5,449. I thought I had that on this screen right here. My apologies. So $5,400, $8,200 is 1.65 the monthly savings. So the bottom line is every month that you're not incorporated, when you're not incorporated, you're working 50 days, 1.65 months, just to pay this difference in taxes off. So that's why I say we are severely overpaying our taxes, because the vast majority of realtors, 85% of them in Florida, are not incorporated. So when people look at this screen, they say, okay, I get it. So the bigger this number is, the smaller this number is. So why don't I just take all my money as a distribution? And the answer to that is you can't. The IRS says you must pay yourself a reasonable salary. So what's reasonable? I don't know. So what did I do when I first started educating realtors on this? I did a boatload of research and I landed on this gentleman here. Some of you may know him. His name is Sandy Botkin. He is an extremely well-established authority on this topic. He was a CPA with Deloitte and Touche, and he was an IRS tax attorney. Do you know what his job was at the IRS? He trained the other tax attorneys on the code. So I would say he's fairly well credentialed. Sandy wrote that book on the lower right corner of your screen called Lower Your Taxes Big Time. And in that book, he's got an entire chapter devoted to exactly what we're talking about today. How to eliminate up to 60% of your Social Security and Medicare tax with an S corporation. Absolutely what we're trying to educate here today. This book, you can find it on Amazon for $15, maybe $20. He updates it every year. Oh, I didn't update this. There is a current version out. The 23-24 version is out. I need to update that image. The bottom line is Sandy Botkin says a 40 to 60% distribution is okay. I took the 60% distribution. The bigger the distribution, the bigger your tax savings. But guess what? Don't go by what I say. Buy Sandy's book, read it, but more importantly, talk to your tax advisor or your CPA on what the right situation is for you. All right, let's move on. So we talked about asset protection. We talked about tax savings. Having a corporate entity will help you stand out, whether it's a corporation, PA in Florida, or an LLC. You're going to be one of the few agents that goes on a listing presentation that has a PA, a corporation, or an LLC on your business card, because the vast majority of realtors do not have it. So if I'm on a listing presentation and I'm giving the prospective seller my business card, and mine happens to have a PA on it, I'm taking a minute and I'm explaining what that PA means. It means I understand how to protect assets. You think your seller wants you to protect their asset, their home? Yeah, probably. It also says that you understand personal finance and how not to give away a lot of your hard-earned money in taxes that you don't need to pay. You think not giving away money unnecessarily to a seller is important? Probably so. So I'm not saying it's going to help you get the listing, but it's not going to hurt. It's going to add credibility to you. And the last benefit we're going to talk about is, we're going to come back to business funding and solo 401ks, but the last one I have a screen for here is reducing your risk of an IRS audit. The Wall Street Journal wrote an article a number of years back, and they said IRS statistics indicate the way you're doing your taxes today, doing a 1040 and itemizing all of your deductions on a Schedule C, you're 10 times more likely to be audited than if you had an S Corp with a PA or an LLC. And what's the reason for this? Well, the IRS knows those Schedule Cs have the highest percentage of fraud, non-legit deductions on them. And when it comes to business auditing, the business auditors at the IRS, even if you're doing $200,000 a year as a realtor, guess what? You're a small company, right? So they just tend to get audited less frequently. Now, the bottom line is everybody knows the IRS is taxed for resources right now. If you don't believe me, just try to call them up and get somebody on the phone to help you. So everybody's chances of an audit are reduced right now, but having a corporate entity with an S Corp will help you further reduce those chances. You're not audit proof, but it's going to reduce your chances. Okay, I'm just going to review this because I didn't have a screen for the business line of credit or the retirement savings regarding a solo 401k. New corporate entities can get business lines of credit. So we have agents in Florida right now that have recently formed their corporate entities that are applying for and securing business lines of credit, even as new corporate entities. So we're going to put up a form at the end of this to see if you're interested in any of these services. Just check that on the form. But it's possible. It used to be you needed 2 years in business, you had to have established trade lines, all that fun stuff. But now there are ways for you to get business lines of credit, even as a new corporate entity. And a lot of times when I talk about the tax savings on that tax savings screen, people say, well, I'm actually reducing what I'm paying into Social Security. So is that going to affect what I get from Social Security when I'm ready to collect? Yes, it will. There's a convoluted formula on how you do it, but it's better for you, and I'm not giving tax advice here, but talk to your advisor. You are probably much better off reducing that Social Security tax as low as you can and setting up your own solo 401k. Again, I'm not an accountant. Talk to your advisor about it, but that is a benefit of incorporating. And then we talked about credibility and IRS audit. So let's talk about, I said in the beginning, I talk a little bit about helping your investors. I'm going to go through this quick. Let's say a lot of realtors are investors themselves. Let's say you have an investor client has 6 properties. And let's say somebody, and they're all rented out. And one of his tenants at property 2 has a party, the deck falls, something happens, somebody gets hurt, and your client gets sued. So they go to court and they lose a judgment. And they can potentially lose a judgment for all of their assets, which includes all 6 of these properties. So what a lot of investors do is they'll set up a different corporate entity and they'll put each of their properties in a separate entity. So now let's go back to that scenario where the tenant has a party at property number 2, something goes bad, people get hurt, they sue, you lose the judgment. This time, the investor will only lose the assets of property number 2. The other assets are not at risk, whereas in the first scenario, all the assets are at risk. So just something for you to consider. I have a lot of agents in Florida that have brought me their investor clients, and some of them have done as many as 16 or 17 LLCs to protect all of their properties. So I just wanted to give you that little snippet. Now let's drill down where the rubber meets the road. If you wanted to form a corporation or an LLC in your state, let's talk about some of the issues. First of all, I reference Florida here because it's easy for me to pull the data. I can't get the data in some of the other states, but it's probably comparable. Probably Florida is one of the states where most people are incorporated. And in Florida, only about 15% of Florida realtors are incorporated. And why is that? And in your state, it's probably lower. And there's a couple reasons for it. Clarity. Hopefully I've added some clarity in this class, and we're going to add some more clarity on the next couple of screens. Cost. It can be a wildly expensive proposition. I have a friend, he's an attorney in Florida. He charges $1,250 to do this. And the next reason is not that it's complex, but that there's a perceived complexity around it. Realtors think, oh my goodness, do I need multiple months of bank statements? Do I need multiple years of income tax statements? So my company has addressed all 3 of these, but that's the reason why so few realtors in each state are incorporated. So the first rule for naming your realtor entity depends 100% on your state. Let me draw 2 scenarios for you. I know I talk about Florida a lot. It's where my experience is most deep. In Florida, you can form a corporation, PA, or an LLC, but it must be in your personal name that's on your license. So you look me up in Florida. My license is Stephen M. Dalia. My PA is Stephen M. Dalia, PA. That's it. That's the rule. It's in the statute in Florida, and that is your only option. You can't get cute. Dalia Luxury Homes, LLC. You can't do anything like that. However, in Georgia, if I were licensed in Georgia and I wanted to form a corporate entity, number one, the predominant entity in Georgia is an LLC, whereas it's a PA in Florida. In Georgia, I could very happily do Dalia Luxury Homes, LLC, as long as nobody else had that name. So the rules for naming your corporate entity are very, very specific to your state. Some other rules, and this comes down to your real estate commission. Here's some of the other rules in Florida. You can't do a DBA. You have to be known by who you are, who your license is. You can't hide behind a DBA. You can't do other business in it. A lot of realtors own investment properties. They do property management. You can only do real estate license activities that generate a commission that are paid to the entity by your broker, period. Well, I own an umbrella LLC for my investment properties. Can I put my real estate LLC or corporation under it? No. In most states, it has to stand alone. Well, my wife and I are partners. Can we both be in it? No. In most states, you have to be your entity has to be individually licensed because you are an individual licensee, so your corporate entity must be 100% owned by you. So those are some of the rules. Now, here's just some of the services that my company provides. We always check to make sure there's no name conflict. We do the electronic filing within your Secretary of State. We have an accuracy guarantee. We wait, takes the state a few days. We get the articles of formation. We check them for completeness and review them and send them to you. We secure your federal tax ID. We complete and submit your S Corp form. That's this form here. And we complete and submit any real estate commission compliance form. A lot of states don't have them. Florida has one. It's called an RE16. And of course, you can call us at any time. Let me just make a comment on these two forms right here. When we say complete and submit, we submit them to you because you have to sign them and mail them off to either the IRS in this case or your state licensing board if it's required in this state. So just wanted to be clear on that. Here are the 5 critical next steps. So I'll tell you some of the timelines on these. So first of all, we have to go to your state, Secretary of State, and we have to submit the filing. Then it usually takes just a couple of business days in most states. Then as soon as it's live, we get your tax ID. Once we get your tax ID and your entity is live, you can go open a business checking account. By the way, I'll get a link to the good folks at AnnieMac Works, and they'll forward it to you. I have a link where many banks are offering incentives. So whatever you pay to incorporate, chances are pretty good a bank is going to give you more money back just to open a business checking account with them, which you need, than it cost you to incorporate. So this happens in a couple days. We jump in, we do this immediately. You can go do this and take advantage of some of those incentives. This is Florida. We update your license with whatever real estate commission you're with, if they require it. And then this is the most important piece. We do the Form 2553. This is where you tell the IRS you want to be taxed as an S corporation. You send this to the IRS. It takes them usually 2 months to respond to you. I suggest you put tracking on that because that's the most important piece of this puzzle. You want to make sure they get it because when you go to do your taxes next year, your accountant's going to ask you, oh, you're an LLC? Are you an S Corp? And you're going to say yes. And he or she is going to say, do you have your letter from the IRS? And you're going to want to make sure you save that and can produce that next year. And then the last thing you want to do is you want to update your W-9 with your broker. So that's it on that. Now, this screen needs to be updated, but I just want to show you why I say this is very, very state specific. If you go down here, here's the prices for corporations. And I know some of these are not accurate, so don't go by this, but most of them are accurate. But you'll see that there's a different price for a corporation and a different price for an LLC. Many states require you to submit an annual filing. It's really just a tax for the privilege of keeping your entity open and operating from year to year. So each state has its own fees and different timings when those fees are due. We help you with that. So it's different for a corporation, for an LLC. So one I'm very familiar with is in Florida, the state filing fees for a PA or corporation are $70 to $125 for an LLC. That's actually, oh, that's talking about, so it's $150 a year for a PA, the annual report, and this number is actually $138.75. $138.75 for an LLC annual report. And then in each state, we did some research a while back, and in each state it has its own predominant entity. So, and then some other notes, right? Again, the bottom line is every state is different. So we don't have time to cover every single one, but we're going to put up that form. If you're interested, just tell us what state you're in and we'll get with you with the actual details on your state. We couldn't possibly handle them all here. Whoops, what did I do? And then this is my last screen. So again, whoops, I left that link in there. That's my Florida ordering page. Most of you are not in Florida, so you can disregard that. What you want to do is the good folks at AnnieMac Works are going to provide you a link to a form where you can indicate your interest, and you can tell us if you're interested in incorporating as a real estate professional, what state you're in, because we now know that's the ultimate of importance, is which state you're in. And if you're interested in any of the other ancillary services, getting business funding, setting up a solo 401k, and our company actually does some marketing and marketing automation as well. So if you're interested in any of that, just fill out the form that is either being popped up somewhere in this presentation or will be sent to you after the fact. So I just want to say thank you so much to the good folks at AnnieMac Works. I appreciate the opportunity to present this very important topic, and I hope you all received some value from it, and I hope to talk to each and every one of you soon. Thanks so much, and that's